Okay, let's go. Well, thank you everyone for joining our webinar today. My name is Stephen Epstein and I'm the CMO here at True. True is an AI organization focused on leveraging machine learning to automate the intelligent processing of lending data. We call this lending intelligence, and we'll be talking a lot more about AI and machine learning over the course of this webinar. In addition to that, we're going to be talking about our predictions for AI this calendar year and into the near future, and through our industry participants have, I think, a pretty robust discussion around where AI has come from, where it's being applied here in our mortgage industry, and where it's going to go. And it's going to be, I think, an interesting way of kind of understanding the whole evolution of AI. I will be moderating the session. And we'll have Q&A open and we'll cover toward the end of the session. And I'm going to be joined by three of our panelists here. So to start off, Melissa Langdale, who is the President and COO at the Mortgage Collaborative. Melissa, thank you for joining us today.
Thank you for having me.
Great. Leora Ruzin, who's founder at Ruzin Creative. And Leora and True, we've been working together for quite some time now. So again, thank you, Leora, for joining us too.
Of course, thanks for having me.
Great. And last but not least, Steve Butler, our President and CRO here at True.
Great. Thanks for having me too.
Great. So before we start the session, just a couple of housekeeping comments. As I said earlier, you'll have the opportunity to ask questions. So during the session, please feel free to leave your questions in the Q&A tab at the bottom of your screen. We'll certainly get to those questions either during the session or in the formal Q&A session toward the end of the webinar. The webinar will be recorded. It is being recorded. And you will all receive a link to this webinar to review it at your leisure and to share it with your colleagues. So please look out for that email toward the end of the webinar. So let's kick things off here and let's get into the root of the questions here, because I think we have a whole bunch of topics to really dig deep into AI. So, the first question here, rather straightforward, right? How will AI change the mortgage manufacturing process? And I think a lot of us would actually make the argument it's already started changing the mortgage manufacturing process. So we probably want to start with that. How has it already started changing, and how will that evolve over time? And I'm going to throw this question first at you, Melissa. I think you have a lot of experience in the mortgage industry, and I think you've seen a lot of manual labor, automation, some technology that works, technology that doesn't work, and now AI. I'd love to get your perspective on this question.
Well, thank you. I'd be happy to share it. I think, all of the lenders that I talk with on a regular basis, it feels like AI is so new, right? There's, the evolution of it has been really, really progressing very quickly, and that can cause some fear and nervousness. And so before we get into kind of the future of things, it may be really helpful for us to just touch base on where we're at today. The first AI was actually founded in 1955. So AI is not necessarily as new as we feel like it is, right? And in fact, I'm going to throw this out there for perspective. I'm hoping everybody does not do the math in this, but the first AI that we would consider AI, where there was visible intelligence that was happening, was actually when AI defeated the world's best chess player, and that happened in 1997. I was in high school, right? So, and I've had a long history in the mortgage industry, so please don't get me wrong. I think. So when we think about AI and where we're at today, I think it's helpful to understand that while there is so much changing right now, and our industry is starting to leverage the tools that are in front of us a lot better and a lot easier, I think it's helpful to know that we don't necessarily have to have that kind of fear, that trepidation, and feeling like this is kind of scary for people to dive into, because it really has had a very long history. Today we're using AI for all sorts of things, right? Siri, Tesla, the facial recognition to unlock your phone, like the word processors that kind of predict your next word or your next phrase or your next sentence. All of those things are things that we leverage every day. You know, for mortgage, as I'm chatting with lenders about it that are in our network, a lot of them are starting to think about ways to help scale their businesses easier and better and faster, help them to look for ways that they can enable their teams to do more and to be at highest and best use at all times. So they're thinking about, you know, policy procedures, policy and procedure writing. They're thinking about scenario desk, documentation, recognition, indexing, and analysis, which I know we're gonna chat a little bit about, and which True does so well. But also, you know, traditional chatbots. How do we get borrowers' questions or customers' questions super fast? You know, some of them I know are actually leveraging things like ChatGPT for like business rules for their LOS and those sort of things. There's lots of ways that companies are already starting to consider leveraging AI for their companies to really to grow and evolve and help make things easier to scale as volume adjusts and markets adjust.
That's great, Melissa. And just, I think, to add some additional context to what you just said, which was amazing. When we think about and we see in the news information about generative AI, and, you know, we're all in there typing an email, and, you know, the email is trying to complete our sentences. Well, this is generative AI at work. That same technology is being used in our industry to help to complete forms and to help to complete letters. And it's such a productivity enhancer. But it's not very scary. This is the same stuff we use to create emails. So it's like, I think we were talking about this earlier. I think, you know, many people get kind of put off by AI because they just don't understand really what it's about and how we're using it today. And they read the headlines about what it may do in the future and possible ramifications. But at the end of the day, the applications are just so simple to really appreciate and leverage and to kind of move into our own business processes. And I think that's exactly what you're describing here. So, you know, it's a great example. So thank you for that. You know, Steve, I'd love to get your perspective. I know you're in this every single day, kind of explaining how AI helps in the mortgage process and where it's going. So I think from a technical perspective, maybe you can add a bit more color to that.
Yeah, and following on Melissa, you were in high school, you know, for that chess match. I actually lost the chess match. No, kidding on that, of course. But yeah, it's really interesting. You know, there's no more labor-intensive process that I found in my career than the mortgage process. I mean, everything's from, you know, underwriting the loan to deciding if you're going to insure the loan, if you're going to sell off the loan, right? Everything is so labor intensive. And the culprit in all of this is the documents that drive the process, because the documents, as everybody knows on this call, really are the source of truth, right? For all the decisions, for all those events that I just mentioned. And so, you know, the documents are a very analog, you know, component to this. And you know, that requires humans to do a lot of the work, right? And mortgage manufacturing to, again, to sell it, underwrite it, insure it, et cetera. And so, you know, AI is, I think, uniquely suited to sort of deal with the document clutter or clogging in the process. And it's a form of AI that we call computer vision, and of course, machine learning as well, in combination with that. If you can put together a combination of computer vision and machine learning, you can get very, very accurate. And now humans can be, you know, you can assist humans, or in fact, let machines do the actual document handling. And as soon as you can turn your analog processes into a digital process, that's when you start to see the real benefits of AI in a process. The whole process can be streamlined and decisions can happen faster. So I think mortgage manufacturing lends itself greatly to using AI in a very specific way that I just described. And so the benefit, I mean, I look at our customers and they close faster, right? They insure faster, the loans get sold quicker. And it's all because the data has become digital off of what is otherwise a very, very labor intensive process.
That's great, Steve. I think we're going to talk a little bit about how this is going to also affect the mortgage workforce. But, as we're talking just generally about AI and the application in the mortgage space, Liara, I'd love to get your input too. I think you've had so many roles, so many different roles in the mortgage industry, so you have so many different perspectives. And I think you've seen what doesn't work and what does work also, like Melissa too. So I'd love to get your perspective on how you see AI really helping the process.
To Melissa's point, some form of AI has been in our space for quite some time. I think where people start to get nervous or start to let fear dictate their decisions is we are at a crossroads in the implementation of AI in our manufacturing process, simply because we're not just having machines document for us or fill in data, we're asking machines to make predictive choices. And so adding predictive analytics into the mix is really where we're in new territory, uncharted territory. And so I've had experience in seeing how underwriters feel when they start to see what AI can do in this space. But at the end of the day, it's a matter of, can our mortgage professionals trust the data and trust what they're seeing from their LOS and from their AUS, their automated underwriting system? And so I've seen underwriters who won't rely on the AUS. They will still manually underwrite a loan because they're looking for something that just isn't there because they don't trust the data. And so really it's the people that are affected either positively or negatively are those who will not only embrace AI and institute it into their organizations in a meaningful way, but also training people and telling them that, we can put all of these processes in place, but if the data is inaccurate, then we're wasting our time. And so it's not really individual people who are going to be affected, it's companies who are going to be affected. If companies don't get on board with AI, they're the ones who will get left behind. And I don't know who said this, but someone made this comment, I don't remember who it was, so I apologize for not giving proper credit where it's due, but AI won't replace people. People who embrace AI will replace people. And that's really what we're looking at as we move forward in the evolution of our space and embracing AI with it.
Yeah, that's absolutely true. And I think a lot of people have been saying that. Liara, I don't recall who said it originally, but
it's bugging me. It's going to bug me until I remember who said that. So,
but it's so true. I mean, we see it every day, and I think that's a really good segue to our next question. I mean, we talked a lot about process. Let's talk a little bit about the workforce, right? So we have processors, we have underwriters, we have loan officers. I mean, we have people that have very specific job responsibilities and tasks. And now AI comes along, and AI is helping them with better data, nudges, insights, even helping them make decisions. And it does change your job. I mean, I believe it changes the job for the better. So let's talk a little bit about that. Let's talk about the transformation that happens within a lender when AI starts to really come up to speed and start providing results. And I think I'd like to start with you, Steve, because there are two sides of this I'd love for us to talk about. One is the impact to the individual. And I think both you, Liara, and Melissa will have a lot of guidance for us on this, but also the transformational impact to the business. And Steve, I know you're involved in this every day, that when we deploy our technology and True is starting to analyze these documents and really organizing them and indexing them and pulling out the data, it changes the way the organization works and behaves. I think that creates some initial opportunity, but also some initial turbulence because things do change. So I was wondering, Steve, if you can give a perspective on how do you kind of think about that upcoming change as a lender and then kind of build for it and then take advantage of it.
Yeah. No, it's a great topic. I mean, we read about AI as a replacement, a human replacement technology. In reality, in practicality, it's really about assisting the worker. And the more that you can embrace it as an assisting technology, the more it's going to basically benefit the organization. When I look at our customers, by far and away, the group that benefits the most is the sales operations in an organization, because it's the sales operations that really are burdened with setting up the loan with all the documents that come in from borrowers, right? They're trying to borrow, they call them loan officer assistants or loan processors, but they're basically dealing with all these documents, and they've got to put them in the right places in the loan origination platform. They've got to keystroke the data in. They got to make sure all the documents have been accounted for, are they the right time periods? I mean, there's just an enormous amount of burden of work on the LOA or the loan processor. When you use an automated solution or an AI-driven solution such as True, all of that kind of comes off the plate, right? And now the LOA is basically spent supporting the loan officer and pursuing either new sales or supporting the more exotic or complex customer that needs more touch than the usual customer. And so they're available to do that. And so the sales operations typically get a significant ROI and advantage from using an AI assisting capability. But the underwriter as well benefits. Underwriters, where they lose their efficiency is when they kind of constantly open and close the file because the data is not accurate, not full, not consistent. There's nothing worse than the underwriter opens it up and says, "Oh, we got a pay stub that's 1 month too old," closes the file, and somebody has to go take an action on that. The AI assistants today can make sure all of that is done. So then the underwriter opens the file, they actually complete the file. And then the final group that I see inside of lenders that is really benefiting from this is on the post-close side, because the post-close side has a lot of burden to get quality where it needs to be before the loan gets sold. And so, tremendous amounts of stare and compare. I mean, I'm probably preaching to many choirs on this call, but tremendous amount of stare and compare to get the quality up to a point where the loan can sort of, be sold off. And so all of that can be automated through the machine learning and the document handling that I talked about, because it's now in digital form. And so you can write software to basically execute condition testing and quality testing. And that's what happens all the time. So I think let's start viewing AI as an assisting technology, and you're going to find many, many beneficiaries. No one's going to worry about losing their job. They're going to realize that you're just much more productive and much more valuable to the lenders that they work for.
So
And
that's,
I
go
oh
ahead,
sorry,
please.
I would just like to add to that. I definitely see a future where, so my background is secondary in capital markets, so I have extensive experience in the post-closing process and how difficult it can be to get loans sold. And my motto has always been the best loans are sold loans. I don't care how much money I can make on this if I can't sell it and know that it's good quality loan that is free from repurchase risk or minimized from repurchase risk. But I see a future where the agencies will fast track a loan that is given some kind of certification, like day one certainty used to be for us, where if it's gone through certain checkpoints in an automated system, that it's given a green light, where maybe it's given some rep and warrant relief on the back end. And so this is really an opportunity for lenders to be able to increase volume and deliver quality loans, because it's been given this, blessing, this automated blessing from either True or another trusted vendor.
Yeah,
That's great. So I think you help kind of build the case for business transformation right there, Leora, and that is, if the AI helps to increase volume, and also improve quality and reduce risk, then it must change business models, right? So I wonder, like, Melissa, you have a really strong mortgage banking background. I wonder if you can hypothesize a little bit here. When people spend less time staring and comparing and more time supporting sales and providing a great customer experience, I have to imagine that's going to change the way lenders think about how they service their customers and build their business. I wonder what your thoughts are around that.
Well, I think both Steve and Lior hit the nail on the head in the sense of if you're leveraging AI to progress your business model in one way, shape, or form, right? You're leveraging it to create operational efficiencies, a better customer experience, reduce your repurchase risk, as Lior mentioned. All of those sort of things are fantastic, but there is an exorbitant amount of change that has to happen in the org in order for you to fully recognize that, right? And Lior started to talk about this earlier, and it really is around trusting the data. You know, traditionally, particularly underwriters have been held accountable, right? They are the risk mitigators in the org, right? Their job is to stare and compare, to be the detective, to find the things that are necessary and needed for that loan to be sold quickly and with minimal repurchase risk. So we're asking them to kind of shift their decisioning and trust in something that they have to see as a partner in their decisioning, rather than something that's taking away their decisioning, and that they have this innate risk, right, in trusting the data and the decision that this system has provided them. And so there is a lot of change that has to happen. And, you know, I've seen companies take the extreme approach and just lock down fields, right? Once it's decisioned with data, they just lock it down. They're like, you're going to trust it, and we're not going to hold you accountable if that field is inaccurate, right? But there really, I think, has to be more of a transformation in the organization to where they really, underwriters start to see the advantage of this. And companies also start to understand how to mitigate the risk that can come with AI, depending on the language model that you're using, depending on what you're using it for in the decisioning process. You know, I tell people all the time, if you think about AI as a person, right? If you hire a brand new underwriter, you're going to put them through a QC process, right? You're going to have a very defined process to ensure that the decisions that are being made are the decisions that the organization would normally make from a risk perspective, right? And so I think companies have to start to shift their mentality, and how do we help our team to see the advantages of this in their space, and then how do we come along beside them and help them to understand how we're mitigating risk as an organization in their specific role too.
That's great.
And underwriters take an immense amount of pride in their work, especially when they're putting their number on it, whether it's their chum's number or their lap if it's VA, and being able to trust the data, knowing it's still their name on that underwriting approval. That's where we have to bridge that gap and show them that, okay, that look at all of the data you don't have to worry about, because it's already been scrubbed, it's already been analyzed and verified. And that's the key here, right? We can analyze data all day long, but if it's not verifiable, then how can we expect our underwriters or other people in the process to trust that it's accurate? And that's where the solutions that are available today, like what True has available, will give the underwriters that peace of mind, and they will have more time to look at the more complex loan scenarios and be able to drill down into more detailed processes. So it's just a matter of, how can we show them that they can trust the data?
Right.
I think we need to build on this a little bit on the sales side too, because while there is a transformation that's needed for underwriting, there also is a transformation on the sales side too, where loan officers are used to being able to have a lot of autonomy and structuring deals and helping to, gosh, if I could just get that one extra piece of documentation, I can prove that bonus is really there, and I can help them to have this extra level of purchasing power because they're in this crazy market that, they have multiple offers and all these sort of things that are happening. And they want to be very active and involved in things that are affecting their pre-approval amounts, affecting what their kind of positioning to their referral partners as, what's possible for that particular borrower. So I think there has to be a transition on both sides, right? There has to be kind of a change management process to get sales on board with the things that they can be leveraging it for to grow their volume, number one, but also augment some of their decisioning that they're making in their pre-approval process too.
That's great, Melissa. And all three of you have said the same thing. It all comes down to data. Listen, AI is much more than just data, but data plays a tremendous role in our industry. And at the end of the day, AI needs data to help make decisions. At the same time, decisions need to be made when data is right. And let's have a discussion around data, and let's really get into the detail of this, because I think we've been talking about some high-level ideas, but now it's time to kind of descend in the weeds a little bit. And if we all believe in the fact that the big primary objective right now, this year into the coming year for AI, is to really help us with data and help us streamline data and create velocity around data and create insights out of data. Talk a little bit about that later on. There's this big question, which I'd like to first pose to you, Steve, and that is, how will AI make data our friend instead of our foe? And when I mean foe, like if I think about stare and compare, I cannot think about a more turbulent, time-consuming, frustrating process than that. That is a foe to me. If I think about a great AI model, basically turning through the data in minutes and organizing it all and extracting it all and indexing it all and presenting it to the process for decisioning, that's a great opportunity. That's a friend. So
Yeah.
Steve, you see it every day. I'd love to kind of I'd like you to think
Right.
about it and talk to the audience about this.
Well, let's talk about analog versus digital for a second, okay? And I mean, my initial career was as a computer engineer, and anytime I had to deal with analog data, it was a whole lot harder than dealing with digital data. So analog data, those that may not know, is sort of this continuous stream of information that comes in the form that the system that generated it puts out, right? So, it could be an audio signal, could be a video signal. But another example of analog is when you go out to the street to hail a cab. That's an analog move, right? And then when you have to give your credit card to the where this is going, by the way, to the taxi driver, right? You give them the credit card. That's an analog move. So let's talk about Uber and what true digital looks like, right? I mean, Uber is, you don't talk to anybody, you don't pay anybody. It's just, all of it is just totally a digital platform. And so as a result, the user experience is typically fantastic. I mean, every time I get in an Uber car that came in a minute, I do take a second and say, wow, that is a great process, right? Doesn't always happen perfectly, but 99 out of 100 times, I think it's like a tremendous customer experience. And so how do we do that in the mortgage world and make it our friend instead of our foe? Because it is clearly, I mean, documents are a classic form of analog data. It comes off of banking platforms and loan origination platforms and point of sale platforms. You have to fill out an online form, but that form goes as a document into the process, an analog document. So, and the problem with analog is you got to convert it to digital to use it. And there's always an approximation required. It's never exact. It's always about approximating that. And so we employ humans to try to make it accurate. And there's where the clogging happens in the process. So what we need to do with AI is we need to do very accurate transitions from analog to digital. And the more accurate it is, the more that this process is going to be automated. Now, it's not an easy problem to take a document that's got, hundreds of document types, thousands of variants, and be able to have a machine figure out what the actual document is, first of all, without a human basically be involved, and then to be able to take, hundreds of data field extractions off of that and then send it down as digital data. It's not an easy problem. True's been working at it for 25 years. We started out as an AI lab, and now we've seen millions and millions of documents flow through the platform, and so that's what it takes. You need tremendous amount of data to sort of flow through the system to basically tweak the algorithms and tune the system so that you can get that kind of accuracy. Once you have it, you have a digital stream of data, and so all the downstream systems, underwriting, right, and any decisioning platforms, business intelligence and analytics now have clean, accurate data to work from. The whole process is run much more smoothly. So to me, great opportunity. This is the holy grail that you need to attack first. And once you've done this, then I think everything else is a whole lot easier.
I mean, we have to start somewhere, right? And we got to get the pebble moving. And the thing about machine learning is if we don't give it documents to learn from, it's not going to learn. And so, we have to start somewhere. And I'm sorry, Bowie. bye-bye. We have to, get the ball rolling, as they say, so the ball can continue to get bigger as it's gathering more data that it can analyze and learn from.
Well, and traditionally, documents have been one of the biggest sources, not the biggest, but one of the biggest sources of fraud, right? When you start to pull out all of that in data, the whole way of catching fraud is the stare and compare, right? That's why it's such a huge part of our industry. When you convert everything to digital data, then you can go, well, this doesn't match this. There's variances in addresses between, documents. There's variances, his pay stub says his net income is this, but his bank statement shows it's this. Right? That all is automated, and you end up reducing risk significantly in the organization as a part of all of that. So I'm excited to see that transition and that journey, both for company risk perspective and industry fraud minimization too.
Yeah.
We were recently had a conversation here at True with our engineering team about some of those use cases you guys were talking about, and we got into a very common use case in the industry, and that is it an 8 or is it a B?
Right.
Yeah, right. And so, I was talking to the engineers. I'm like, can you imagine the processor sitting there with 2 screens and looking at these documents and kind of saying, is there another 8 in this document set that I can see whether it is a B or an 8? And is that a corner on the 8 or is it rounded? And we were just talking through it, and the engineer was smiling and said, Stephen, this is such a simple problem for a machine learning model.
Yeah.
It's like, just look at the pixel setup, understand where the rounding is, compare it to other documents. So I said to him, I said, well, this is exactly what a human does. I'm like, yeah, but we do it in 3 milliseconds, whereas a human can take 20 minutes to do this.
And they still may not see the difference
and
enough
they still may not see it. So it's like, this is the power of AI. That's where it becomes our friend. I'm sorry, Steve, for interrupting you. Go ahead.
No. Leora said it. It's true. We have technology here at True where we can detect changes in the font that were done manually and are different from the other fonts on the page, where the human can't actually see that, right? And that's the kind of fraud that you want to be able to detect. So, you can put technology at the problem here and solve a lot of these issues once you go to digital data.
Yeah, it's tremendous. Great. Well, so on to the next question, because it's a pretty big turn in the conversation, and that is, we've all lived through our downturn here, and the industry is starting to build up some momentum, and we're inevitably going to be faced with the same cycle we're always faced with. And that is, when the rates do start dropping and people start getting motivated and the season is right, applications start to skyrocket. And then as lenders, we're all stuck with the same problem. Need more people, need to stare and compare more data, need to figure this out. And so, I think AI has finally kind of provided us with this opportunity to say, how do we prepare for the next upturn? Is it another swath of hiring only to kind of deal with the back end of it? Unfortunately, potentially the firing, as we go through our cycles, because every industry goes through cycles, we're all seasoned and experienced enough to know that. Or does AI also provide our businesses a level of elasticity to kind of manage the ups and downs without churning large workforces? And it's a big, bold question. I'd love to throw it out at all of you and see how you feel about that.
Well, I have my opinions, and we talked about this, and this is I'm very open about my feelings about this subject specifically. Our industry is terrible when it comes to dealing with the ebbs and flows of volume, and I call it human spackle. We throw humans at problems, and then when we're done with them, we scrape them off the wall, right, and we move on. And so, with the ability to institute AI, we can turn on the nozzle and turn off the nozzle without affecting people. Will we need to enter into some kind of right sizing of the industry? Yes, absolutely. But once we go through that right sizing and we have the right amount of people and have the AI to complement their roles, then when the volume ebbs and flows, we're just dealing with the technology. We don't have to worry about hiring and firing people and affecting their lives. And now is the time to do it. Volume is down. Now is the time to institute new processes. Now is the time to engage in new technology. Now is the time that we can train people on the technology and re-engineer processes. So when volume does pick up, because it will, we know it will, we're ready. And we don't have to worry about mass hiring, dumping bonuses at people, and all of this craziness that happens when we're in a hiring spree. And then all of those people are the same people that are the first to get let go when volume drops. And we don't have to continue to do this. It's like, come on, people, let's get our heads out of the sand and figure out a solution. And this is the solution.
I could not agree with you more. There is the scalability of our business, the way that it has been in the past. It's been reliant on humans coming in and going as the business has needed it. Spot on. I think the one thing we haven't touched on today that lenders really should be thinking about as they look at, how do I prepare my company? How do I rethink my workflow and design an operation to effectively use all of the technology that I have or that I should have? We need to not only think about kind of the efficiencies that it creates in the process, but in other words, that 20-minute process you just mentioned, Stephen, going to 3 milliseconds or whatever the number was.
Right.
We also need to think that AI doesn't sleep. Right? There's no, when a document comes in, if you've got a process put in place where that document is reviewed, analyzed, decisioned, and then pushed to the next queue, you've automated a big part of your process while nobody was in the office because the bar was set the document at 10 p.m.
That's right.
And the customer didn't have to wait until 10 a.m. the next day for somebody to get in, analyze the document, put it in the system, figure out that the loan can then work, and then call the customer. They didn't have to wait hours. They were able to find a quick decision to their answer. Can you imagine how many loans you would convert if you were able to tell a customer confidently, instantly, that you can get pre-approved?
And you just mentioned, like, imagine you're on a Sunday and you're out shopping for houses, and you can have your pre-approval in hand at any time of day. I mean, that is a game changer, especially, with volume where it is, inventory where it is. You got to snatch up that house when you can, and you can't wait until Monday or Tuesday to get your pre-approval. I mean, again, this seems like a no-brainer to me. I don't know.
Can I be devil's advocate for you guys? The answer is no.
Sure.
The answer is no. I agree with you 100%. No, but honestly, the definition of insanity is if this industry doesn't tackle this problem and goes through another cycle like this. And the thing that I'm worried about most this time around is people have moved on. The people that processed the loans in 2021 and in 2020 during the they've moved on to stable industries that don't have those cycles, like healthcare, like insurance and other financial industries. And so when we think that we can just kind of put the fish out there, the hook out there, and hire in a 3% unemployment industry, in general economy, and hire the people we need to process, 10,000 more loans a year or whatever that number might be, they're just not going to be there. So this is a problem of elasticity. Listen, elasticity has been solved in the airline industry, right? They manufacture tickets, right? They don't go hire 1,000 people offshore to get ready for the holiday season at the end of the year. They just dial up the compute resources that they need, and then they dial it back down when ticketing slows down.
Or they use antiquated technology, and then we know what happened with Southwest Airlines two winters ago. So case in point.
That's right. No, they got a different issue there. But this is the idea, is that, this industry can solve this problem if it gets behind, digitizing the documents and using that data for decisioning. I think that this problem can be solved. Elasticity is the way to do it, and I'm a little worried about the industry being ready the next time this upturn comes around.
I think we need to look at this in a little bit of a different layer, in the sense that customer expectations are changing right now.
That's
too.
it. Exactly.
right? So if I can order on my phone, which probably everybody here has it within arm's length of them,
Yeah.
right? I can order something on Amazon on my phone and it is delivered to my house in 2 hours. Why in the world does it take 30 days to get through the mortgage industry? People will not allow for that to continue. Now, it might take 30 days to purchase a home. So don't get me wrong. You got to go through the diligence and the inspections and all of those sort of things. But they won't accept that the loan also takes 30 days to get through the process for too much longer. So lenders that aren't taking advantage of some of these technology solutions are not going to meet customers where they can and should be. And so I think, you know, there also is a layer of you should be looking at these things to prepare for the next upturn, because that upturn also can meet customers. You know, your company can be better prepared to meet customers where they are.
And I've heard it so many times, loan officers, you know, I'm not an administrative person. I am I'm helping customers make a humongous financial decision, a life-changing decision, and I'm spending time rustling with documents and uploading documents and manually entering in
Terrible.
data.
Yeah.
Yeah, and just imagine how much time they can have at their disposal to actually help people if they don't have to worry about that, if they don't have to worry about the documents. And we give borrowers the ability to help, you know, push their transaction forward as well. They're not having to rely on, well, I've uploaded the documents, someone's got to have to pull them in and do what they need to do to it. It can all be done behind the scenes. And so, you know, we're giving loan officers the ability to be who they are meant to be, which is the financial steward for our borrowers and our consumers.
So there's a tremendous takeaway from this part of our conversation, right? And the tremendous takeaway is if you use AI to solve your document problem, you then get elasticity in your operating model, which ultimately will result in a much better customer experience, which makes you more competitive. I mean, I can just go on and on and on. So,
I mean,
Steve,
we haven't even
right.
talked about servicing. We haven't even talked
You
about the
didn't even get-
benefits on the servicing side.
Well,
And that's a
exactly.
whole other thing, you know?
Well, right on. So, Steve, it's crazy that we haven't solved this problem yet, but the problem has actually been solved. The industry needs to start solving it by using this technology, and we'll just come out and say it. But interesting. One conversation really focused on elasticity leads us to all these other benefits, which is a great segue to one of our last questions here, and that's ROI. So, you know, a lot of people, when they talk about AI, they think about this mammoth investment. And by the way, it doesn't always have to be a mammoth investment. And the first question, well, where's the ROI? Like, how soon am I going to see my return? What's this investment going to bring me? And ultimately, how much am I going to save per loan? I mean, Steve, we get this question all the time.
Yeah.
So, you know, we have enough data now to have a really robust conversation around ROI, and let's do that. And Steve, I want to pivot to you because you literally are asked this question all the time. So maybe we can help the audience understand, like if they started to use AI to automate their document processing, what type of ROI would they see on a loan basis?
Yeah, let me start with a question that or feedback I get every time I talk to the owner or the C-suite of a lender, and it's like, Steve, we've been investing in technology for 10 years, and our cost per loan is still going up. So why are you telling me that you're going to actually save me some money or improve my business? And so I first say, you know, couple of things to couple of comments on that. First of all, the problem the lender has today is much more difficult than it was 10 years ago. The GSEs have set the bar for quality much higher than it was 5 years ago, 10 years ago. You know, they're worried about, in this kind of economy, lenders going out of business, and so they don't want to own those loans, and so they've made it a whole lot more difficult. So lenders work harder for the money they've got. And then the other thing is that borrowers are more complex. I mean, the idea of a W-2 wage earner, single wage earner with all their money in single account, you know, been employed at the same same company for 5 years, 10 years, whatever. That is the anomaly, right? Borrowers are a lot more complex. So anyway, the lender's job to underwrite and sell off a loan and get a loan insured is a whole lot more difficult. So I like to tell people that give me that feedback, I said, just remember that if you didn't invest in tools, you'd probably be spending a whole lot more than you're spending today, even though you're still losing money on a per loan basis during this low economy. So a couple of things that I want to point out is that how AI enters an organization really dictates a lot about the ROI they're going to get. You know, if a lot of these lenders are so sales driven, don't underestimate the power of the LO to sort of determine whether or not a particular technology is going to be used and embraced in loan manufacturing. Frankly, if the solution slows them down, they're basically not going to use it. And often we find that's the reason why there isn't an ROI, that the LO operation just decided this is slowing us down, we're not going to use it, and therefore the investment sort of died on the vine. When you do embrace it from the sales side and the operations side, we have tremendous results. I mean, I have lenders that today have underwriters that are 2 and 3 times more productive. The loans are set up for them. They're dealing with many more loans per day than they used to. We have customers that tell us that they have 1 loan officer assistant that's doing the work of 5 now, right? We have mortgage insurance customers that used to take an hour to turn around a loan. Now it takes less than 15 minutes. And I could go on and on. The ROIs are strong, but it really comes down to how you're applying it and where you start with the organization. And most of the time, if you start on the sales operations side, you see the magic start to happen in the organization.
And just to add to that, you bring up a good point. I've been on the side where we've all decided, okay, we're going to get this new software, we're going to get this new plugin for our LOS, but we don't get the right people in the room at the very beginning to vet the process and vet the technology to make sure that, number one, it'll work with our LOS and work with all the other systems we have connected to it. And then number two, that is it actually going to give us what we need, and what processes do we need to change to make it work? And so when I'm the project manager for a new implementation, the first thing I do is I create my group of key stakeholders in my organization that will help launch this product or launch this software technology. And those key stakeholders aren't just the leadership team, they are the SMEs, the subject matter experts in every part of the manufacturing process. So you get your top processor in the room, your top underwriter, your top LO, and you get feedback from them as you're rolling this out. And what this does is not only does it ensure that you implement the solution and that you use it, but that you have champions within your organization that will go and shout from the rooftops, you guys are not going to believe what this is going to do for us. And not just, preaching or drinking the Kool-Aid, but that they've actually seen what the solution can do and how it will improve the organization and improve everybody's lives. And so it really starts at that beginning moment, getting the right people in the room to help make the decisions and get everything rolled out.
I agree completely. Having a very defined change management strategy around any new implementation is going to be key in maximizing ROI. But I also think you need to make sure that your ROI has a little bit of opportunity cost in there. Are you missing anything by not implementing that you should be considering? And so I think, when I look at ROI, it's got to have a layer of opportunity cost in it as well.
Yeah,
Mm-hmm.
absolutely. Yep. That's great. Well, thank you. We're going to wrap up soon and go to our last question here. And I think it's an interesting question. And I think, Melissa, when we were preparing for this, you actually rephrased the question. So the question here is 2024 the year of AI? Or, as you put it, is 2024 the year that AI starts? But I think it would be nice to just talk a little bit about really where we think AI is going to go this year into the coming future. There's we answered a lot of the questions that came in, but there's one that's remaining here, which I think is really relevant to this question that came in from the audience, and that is, what role, if any, do we see generative AI playing in the actual decisioning process? So we can start with that question, or we can just go deeper into the overall topic here. But really, let's talk about beyond just data intelligence and data processing, where we think AI will kind of take us over the coming year into the near future. Melissa, I want to start with you because I think you had a really nice perspective on this too.
I believe that this is just the beginning. I think the speed of evolution for AI right now is the momentum behind it is significant for our industry. But just like anything, it takes a time to fully implement and fully see the value in rethinking workflow design, rethinking kind of customer experience, all of those sort of things. So I think this is just the beginning. I'll take that. From a generative AI perspective, I think the question that is asked is really interesting for a couple of different reasons. One being, if we start, it depends on where companies are considering implementing AI in their decisioning process. A lot of companies that I talk to, a lot of lenders are starting at the beginning. They're starting at the pre-approval process because depending on which model they're using and how they're leveraging AI in that process, it gives them more time in case there is something that was missed. A decision was made based on limited data instead of holistic data for the borrower, right? It gives them more time to kind of pivot and strategize. So it really, I think, to me, it depends on where they're looking to implement it in the process. I think, if you look at it from an underwriting perspective, there is a layer of risk there that the organization just needs to be aware of, and needs to be aware of what's possible and feasible to fully leverage AI for, and where we should involve kind of human decisioning process. But on the opposite side of it, would implementing something in, let's say, the underwriting part of the process help a company to meet fair lending needs more, right? Is there that extra layer that the organization feels like they can eliminate any kind of bias in their organization and really be able to meet the holistic needs of their community as a result? But then the last part is QC, because we've already touched on all of these areas, right? So a lot of people are looking at pre-approval, a lot of people are looking at QC opportunities. How do I completely automate that process to sell loans faster, to keep my post-closing team at highest and best use? How do I comply with all the things that Fannie and Freddie need from me from a post-closing QC perspective? All those sort of things. So to me, I know this doesn't answer the question directly because it's not a specific role. It really depends on the risk that the organization is willing to take, as well as the investment that they're willing to do in appropriate change management process throughout the process too.
Yeah, just let me follow up with you, Melissa. And it's interesting on the generative AI comment, because there is a lot of risk if you use AI to make, for example, underwriting decisions, right? If you said we have a completely AI-based solution, and the risk is not that AI couldn't make a decision that's unbiased, but the perception will grow if you don't get your loan and you hear that this lender is using an AI model to make the decision. And in social media today, that reputation and brand damage can be significant. So it's probably going to be held back for those reasons, not that AI couldn't do the job. And that's maybe a legitimate reason to keep it at bay and always have a human in the loop for that kind of decisioning. But I wanted this idea of, is 2024 the year for AI? I mean, frankly, I would say to everybody on this call, do you need to get your lending time to close down to 2 weeks? You've got to think about the fact that the stock market's at an all-time high, and people will sell off and be cash flush and be cash borrowers. And so you're going to basically be competing with the cash borrower to a much greater degree in 2025. And so in that sense, you've got to have turnaround times that are 2 weeks or less for time to underwriting. And so I would say AI is going to be a major weapon, especially if you tackle the document problem and get digital internally, a major weapon to get you down to 2 weeks and better. And I think you're going to have to be there to compete, or you're going to lose market share in a very healthy market in 2025 and 2026, probably.
Right, and I would argue that 2021 was the year of AI. If we could get one good thing out of COVID, it was that it finally opened our eyes up to how can we make this process better, because we need to continue to function as an industry, even though everything's on lockdown, even though, you know, the economy is where it's at. And so it forced us to you know, pull up our bootstraps and come up with digital solutions to serve our borrowers, even though we're all, you know, working from home. And so has the train left the station? No, but it's picking up. It's picking up speed. And if people don't get on board, if companies don't get on board, you're going to, you know, we're seeing an increase in mergers and acquisitions activity. And you're not going to be a company that looks attractive if you're still dealing with antiquated technology, and you still have underwriters that are manually processing agency eligible loans, or if you're not offering products that are needed in your community. The thing about being able to institute a solution that automates these processes, it opens up doors for companies to offer more products and have comfort in being able to offer non-QM loans, bank statement loans, because the AI can read the bank statements, the AI can read the tax returns, and be able to get into the nooks and crannies that maybe even an underwriter either doesn't have time for, is just, or is missing something. And so it helps augment that process and complement that process. And so, and you know, Steve, you brought up a good point. I'm one of those people that have effectively left the industry because of, for all of the reasons that you stated. And I know many people that are in my position that have decided to move on because we've been part of that human spackle dilemma. And you know, I needed to find a job where I felt like, if I do my job and do it well, I'll still have a job in 6 months. And I don't feel that in our industry right now. And we need to solve for that. And this is a solution that, that will give people the comfort and the ability to come back and feel more secure in their role, and that they're doing more than what they could do before.
Yeah.
Leora, that's great. And you've taken a very clinical topic like AI and you've really humanized it. So thank you for those words. And I think that's a great opportunity to wrap up our session today. I'd like to thank everyone in the audience who attended and shared a bunch of great questions for us to, you know, get into some more discussion here. If you'd like to learn more about AI and AI in lending and True, please feel free to visit our website at true.ai. Or send us an email at info@true.ai, and we'll be happy to get back to you. And you can have a discussion with one of our AI experts or people within Steve's team to talk more about how True and AI can help you in your lending organization. As I said earlier, within the next 24 hours, you'll receive a link to this webinar recording. Please feel free to review it at your leisure or to send it on to people that you think might benefit from this content. And really, on behalf of True, I'd like to thank all our presenters and speakers here today. Steve, Melissa, Leora, your wisdom and your insights, just fantastic. So thank you again for your time, and wish everyone a great day today.
Thank you.
Thank you.